Market recap for Wednesday, the 17th of September, 2025. Alright, so today was FOMC. FOMC is a classic two-stage delivery. And one important note, actually two important notes for me. Because FOMC, I used to not trade the Tuesday and sometimes the Monday, depends. Sometimes I just be like, okay, if the day is garbage. But I need to just stop trading both days because I tend to get FOMC, NFP, CPI, whatever like the big news. I tend to get it right, so I might as well just skip the BS and then just make sure that I get the news right, and it'll just be way easier, right? So for new rules update, Monday and Tuesday for FOMC Wednesday is banned. Anytime, every time. There's just no two ways around that. It's banned. Alright, let's have an outlook on the weekly. Okay, so there's a lot of stuff going on, and let me explain. One thing though, if you didn't roll your contract over by now for NQZ, which is the December contract, you'd probably get cooked because the PDA raise on the other contract are definitely not used, right? So make sure you have your contract updated every time, right? So let's start with the weekly. I didn't even look at the weekly. All right, so we're expecting bullish, what do you call it? We're expecting bullish delivery, right? And for optimal trading, how do I say that? For like optimal delivery, right? Once in the weekly, I don't really expect this to feel like the weekly gaps like that, right? So I'd expect the price action to be filled. So let's say here we offered buy side. I'd expect us to at least go down here for sell side for me to count us discounted, right? On a weekly time. So anything below that is discount, right? Think about it as in like not an immediate, just a rebalance, not an immediate rebalance, just a rebalance. But think about it that way. Anyway, on the daily, so if I can add this, right? When was the last time we had discount? Just think about it, right? If you are following on the daily time frame, the last time we had discount was this low at this wick, which goes to the CE, right? And then after that, we go up, right? And then create a fair value gap, right? On Monday, and then we just shoot up, right? Not really offering no discount. And on Tuesday, we do nothing, right? So we need a low for the discount. So what is the most protected low? If the market is still bullish, so my idea, we're still bullish, right? Because we're at all-time high. I'm not looking for anything lower, except if I'm corrected. If I was proved wrong, right? So what's the last protected low that offered discounts? So think of it this way, right? If you follow the PDA raise in here, you'll see every time we kept going for discount, except how we started this week, this Monday, which left an open. I'll actually have to show it here so it makes sense. Monday, what did we do on Monday? Right there, we leave an opening range gap, right? That's big for Monday, right? We also left one for Thursday, but it wasn't as significant as this opening range gap, right? And these normally would be filled for later, but because of Fridays, then we'll go to the CE on Tuesday. So like, if we keep it up with all the PDA rays, Monday is just an anomaly, right? It goes up high, and guess what? On the 4-hour, how Monday goes up, it goes to a 4-hour fair value gap, right? That's cool. And most importantly, it leaves relative equal lows. This low is a CE, right? But the fact that it kept relative equal lows, that's perfect for me, right? Normally before, I used to like, oh, relative equal lows, I chase it on that same day. Like, no, I just know normally this is something that news does. News like weeks, right? So if you know a CPI or whatever, you know what I'm saying, like earlier will make relative equal lows or whatever, right? And the fact that Tuesday posed just confirmed the fact that we're gonna come back for these, right? Cool. So all of that is in hopefully all that makes sense. So then we need to look at discount, right? So technically, like the range, and I didn't even like count it, it'd be like this low, right, all the way to this high. I want to be at discount, right? I don't know if OTE will be, okay, this is just getting messy, right? So I'm not even gonna look for OTE. But if we look at the PD arrays, what do we have, right? At discount, we have two PD arrays, right? This fair value gap and this volume imbalance, right? This is in premium, so it doesn't matter. We don't care about this. We care about this fair value gap and this this volume imbalance on the daily time frame. The second time frame for us to move with intraday is what? The 4 hour. Normally the 4 hour is the one that gives me like the closest stuff to the tick, right? And again, in the 4 hour, we have a fair value gap. I'm not looking at it because I'm looking for it to be on the lower side, but I'm referring to it, right? I'm referring to it. And I know it's inside this daily gap. So I have another chart that kind of takes care of it. So that's what I was looking at, right? And technically I should really have it filtered down to like this, because that's the real gap. But we'll get to that later. Anyway, this is the CE. What do I have here? Anyway, right. So now we know that we have the two PD arrays, right? What I actually expected is us to react to this one, because I felt like this is a bit too far, right? But then when price started dipping deeper, right, I was like, hold up. Yesterday, because on the 4 hour I can't find another PD array. I don't like that fair value gap. I'm liking like maybe the order block, but like this order block is not. We already used it. The CEO of it don't make sense, so I don't really want to use it. But then I remember yesterday, ICT said this was a rejection block. I didn't know rejection block could be used that way. So if that makes a rejection block, and that 4 hour is that low, it was the last low that went to discount. Remember, this goes to the daily CE and rejects, right? And if that qualifies as the rejection block, so that's my 4 hour PD array, and this is now my daily PD array, the volume imbalance and the rejection block. Perfect. Two of them close to each other right there, and we can see the low was the rejection block. Cool. So let's explain the day and the trade. So we already know price is going to manipulate down here, right, for us to distribute. I don't care about the manipulation. I can see the manipulation coming. I don't care about trading it. I care about trading the distribution, because if I get the manipulation wrong, it is what it is. Let's say it actually manipulates up. I wouldn't expect that, but then that means we're going to distribute down. And if that happened, that's it. That's a top for a bit, right? The fact that we didn't do that, remember, that means we're bullish. So I'm bullish for tomorrow and I'm bullish for Friday. Anyway, let's get down to the lower time frame. I've never been that high time frame for this long, but I feel like it needs to be explained. Anyway, how I played this day, right? So let's start at the open. We open. Let's just check the opening range. We instantly fill our opening range gap. It was basically a mini opening range gap, right? And at the same time, we have created the initial buy side. We have London buy side and the PM side, buy side, and it's all basically relative equal highs, kind of, right? So we have a lot of buy side above us, but I'm bullish. What does that mean? If news is gonna come, I need us to manipulate lower for us to distribute higher. So they gotta keep those, right? I need them to at least keep one of them, right? Or two of them, or make relative equal highs with it, right? So once we open and we go take the initial sell side and then create relative equal lows with London, right? I'm in the morning of FOMC, I'm looking to build the buffer for me to take the FOMC trade, because I could get manipulated out of it, right? And that's actually what happened today. So it's good that I did that, right? Whatever trade that I take in the morning is just a small trade as the buffer for the first trade in case I lose. Anyway, we go create the relative equal lows. I can see it's going up there to sell, right? I took the buy to here, right? And I could take the sell, right? It doesn't matter. Like either way, I take it. This is the manipulation. This is the distribution. I can see it like clear as day. This is like the easiest trade, right? I could have taken both of them, but then that makes it risky. Try to take both sides. But if you ask me what would be the best thing to take was the distribution down. It was so obvious. It was so easy. We hit midnight opening price right there, you know? And if you want to be a seller, always sell above midnight price. First presented fair value gap and relative equal lows. That's easy. But I just couldn't be asked to wait, can't lie. So I just took the buy and just stood it there, you know? They're both obvious, but like if I wanted to be conservative, I really should have just waited for this. Okay. Anyway, that's the short. That's covering me like I don't even know, around 500, right? For me to like lose on the first risk heavy, right? Because I'm willing to lose like max 500 on an NFP days, right? And if I can take another 500, that means I can go for full risk, right? So NFP, I mean not NFP, FOMC protocol, right? FOMC is a typical two-stage delivery. Typical, not always, but a typical two-stage delivery, right? So at 2, FOMC starts, right? This whole thing all the way till 2:30, you basically don't touch it, right? 2:30 will start the actual FOMC movement till basically 2:45, right? Till 2:45. So in my rules, I'm only allowed to enter or even look for entries past 2:40, but I'm really aiming for 2:45 minimum. Okay, minimum is 2:45, but I'll allow myself to enter 2:40, but it's most like 2:43, 2:44, whatever, right? This short, I've seen it, right? Now this short, I've seen it, and I didn't really see it as a 2022 model, but that's what I seen on Twitter. That's what ICT took, right? He took this short all the way down, right? I seen this short to like I don't even know. Like, I can't explain the first entry because if I really did see the short, I don't know why I wouldn't let it take this low. That's just stupid of me. I think I just scooped for ES and then seen an SMT, and I just instantly entered, and that was just absolutely stupid. Just making this, oh, this is an inverse fair value gap because it keeps working into it cap, right? That's just me hoping, right? So boom, I take like a big chunk of that 500, right, as a loss here, right? Because this was my stop loss, right? Because after that, I know it's gonna take it. But then I zoom back out, and then this is the low, right? I knew this low is still Super Bowl, but like I don't know how far it go. So I know I got two options. Try to catch something like a breaker, and it's gonna possibly form around here, right? But I know it's new, so it could just leave without me. So I was like, you know what, fuck it. This time it's gonna. I know I have conviction. I know what I'm looking for, and it's what it's 244, right? By the time here it's 244, and I was like, you know what, 245 there is gonna open, and I'm gonna be allowed to enter. So it's time to me to just grow some balls and literally just enter on like tail soup, right? Tail soup, because I know what I'm looking for. Eventually, if I can average my entries, it's gonna be way better, way better than entering on something like here or something, or like maybe here. Because okay, let's say I didn't actually tell soup and I'll try to enter on this fair value gap. I would have been cooked. That would be my second loss. That's it. I would have missed it, right? So now I have the PD arrays to work with, right? I know this didn't hit it to the tick, so I'm trying to just I put a limit on the low of the fair value gap, right? So that is another place where I'm like, okay, if we want to go to discount really and think about it as a immediate kind of rebalance, a delayed rebalance, whatever you want to call it, right? It'd be to this high, right? So that is a very easy place for it to reverse, right? And it could happen. So one MNQ entry right there, right? Again, I want to see what price will do. When it went down, it didn't hit PD array, but I thought of it as a mohawk. So before he even went back to this price, that's my second MNQ entry, right? And I let it go. See how good of an entry this is? That means if it turtle soups it again to the next PD array, I do not care, right? Why do I not care? Because I literally entered at the lows, right? And it really don't matter, right? So think about it. It's an MNQ entry at the lows. What's my stop loss? I have like a stop loss in my head, which is, it's not this low. All right, let me get it. So at the rejection block, think about it. If you were entering the fair value gap, you wouldn't want this to fail. So the stop loss would be this low, right? That low would be the stop loss. And this stop loss would be under the rejection block, the volume imbalance, whatever. Regardless, I know I can't react to it because it's just gonna wick and zoom, right? It's gonna wick and zoom. So I'm gonna have to turtle soup it, right? Regardless, my average entries came back to around like here, like 4 MNQ entries, right? The risk was so low, like I didn't even think it'd be that low. It was actually the best way to enter this was turtle swooping it, and then if it went to here, I know that I lost, and there's literally no point for me to trade, right? Because if we take that low, there's not really PD arrays that are close. They're gonna be so far, and that means we're not gonna go for that high because we're running out of time, right? We want to use the 250 macro to send this up, and then guess what? The 250 macro till 310 right there to midnight price, and that was my exit. It was perfectly at the max profit, and boom, think about it. It's such an easy trade. Easy, right? And the stop loss was managed, right? Even though it actually was scared because that's the first time I entered a turtle soup trade, seeing price keep going lower and lower. But it's so much better because I know the 1 minute whatever PD arrays do not matter, right? They do not matter. Like price could respect it, price could break it. If price respected this and went up and then went down, now what? I would have got cooked. So if it makes sense to turtle soup, just turtle soup, right? And just average the entries in. If you, like for example, let's say I turtle soup right here and it works and it goes up, right? And then I would need something to be a clear breaker. This don't look like a clear breaker, but once we go above here, that's a clear breaker. So like, let's say it was basically like this, then I would enter again here and here. Regardless, the target was of course this high and this 15-minute fair value gap, right? The fact that we haven't reached it, it don't matter because the lowest hanging fruit objective was the initial buy side, and I mean midnight price actually, but realistically for liquidity is the initial buy side, and we went and got that, and now we keep creating this, which means I could expect London to actually have a decent 2022 model or short, basically somewhere here to balance this daily wick, right? This is a large wick when you're gonna need the belt balancing, right? And for us, oh, wait, no, I would not want anything to take this, right? Because if we take this, see, this is me already like foreshadowing to more play. If we take this is previous daily high, and for basically for an easy trade, yes, tomorrow I'd want us to like keep going down, so like New York can take us up to take previous daily high, and if we end up taking previous daily high, that means we're gonna be in the range, right? We're not gonna go so much above it, right? Or might end up just down here, so it'll just depend, right? Anyway, I think that's enough. Yeah, I hope I covered everything because like this day is important to get every detail. Oh, also like new weekly opening gap. All right, think about it on the week. New weekly opening gap is the true open, right? So one of the lines is going to be the true open, and anything below it, like I know this week is bullish. Why is it bullish? Because we took previous weekly high. Like you already know we're going to expand this week high, right? The easiest, simplest term. Like we're definitely not going to go there if we took this, basically, right? Most probably. So we already know it's going to be a bullish week. What's the most likely areas? Let's say if I'm on a daily time frame, if this is how I trade, right, and I can like carry it for a few days, buying below weekly open, right, which is new weekly opening gap, right there. See, so like let's say you just kept buying and buying and buying and buying like 1, 2, whatever MNQs, and you just let it ride out, because on like a daily time frame type of trade, that'll take days, because I can almost guarantee you Thursday and Friday are gonna go up. So yeah. Anyway, discount heavy, and the latest discount, the last discount, right? So make sure all of the PD arrays that should be there are in there. And now for bullish price action and continuing the all-time high, this now on the 4 hour, let me get it right, on the 4 hour, this is the rejection block, right? That will be paid reference later, but it's such a large wick that we're gonna have to use the quadrants, so I'm not gonna expect the rejection block to fully work. And this daily time frame, the wick is so large, it's crazy, so we're gonna have to rebalance some of that, right? It's not gonna be something like, I don't think it'll be something like this, right? This wouldn't make sense for like, I'd expect us to just decently rebalance it and then shoot up for Thursday and Friday basically after that, right? Taking this for sure before Friday. I mean, before the end of the week, right? This ain't gonna be the high for the week. Anyway, that's the market recap. I feel like I yapped a lot, but I feel like I need to get all the details here so I don't mess up big news days, right? Because I do tend to get them right, but if I'm gonna be skipping Monday and Tuesday for something like FOMC, I need to get it right, and I should be allowed to risk big, right? So I'd open double the risk, like the amount for my maximum, and for the profit double the profit, because how fast it moves. And remember, you can always tell soup, or you can take kind of aggressive entries without confirmations, because this is normally what you'll get, just straight green candles that don't care about any retracement, right? And yeah, and always manage. You know how I would avoid the loss if I just wait for something to the tick. What was that something to the tick? Right there, low quadrant, a volume imbalance, and the rejection block. If I wait for that, and let's say I just vote, like let's say if there's something under 15 seconds, right? Like the second that we invest this 15-minute gap, like boom, right there, and I'm like, you know what, whatever rebalance I'll take, I'd still get my close average entry, right? And the stop loss would definitely be way less, right? So that, or I could just use something on like the closing wick basically, right? How the wicks close or whatever, right? There's few ways to enter this, but aggressive entries are for sure better. Remember, between 245 really starts your entry, like when you're hunting for entries, and I think this is 245, and you're really looking for it to start at this 250 macro, right? If price doesn't go by, I don't know, by like 310 to basically almost your TP, then there's just no point, right? And always take partials if midnight opening price is near you or like on the way. Always take a partial there, right? As you can see, midnight opening, dump, right? And then we pump again. Anyway, that's the market recap. Enough yapping. Peace.